Ladies and gentlemen, good day and welcome to the Q2 FY21 earnings conference call of Manappuram Finance Limited, hosted by Motilal Oswal Financial Services Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Piran Engineer from Motilal Oswal Financial Services Limited. Thank you, and over to you, sir.
Yeah, thank you. Hi, everyone. Thanks for joining in and welcome to the conference call. Today, we have with us the entire management team of Manappuram Finance, led by the MD and CEO, Mr. Nandakumar. Without further ado, I would like to hand the call over to management for opening comments, followed by a Q&A session. Over to you, sir.
Thank you. Good evening and thank you for joining to discuss our Q2 FY21 results. Since our last interaction in July, we have seen strong recovery on the economic as well as the pandemic front. As the rate of new infections has slowed, most economic indicators have shown improvement in the last couple of months. GST collections have recovered and regained the 1 trillion rupees level for the month. Demand side, inflation remains benign. Credit flows to productive sectors, including NBFCs, have improved. Interest rates are at near all-time lows. We are seeing strong festive demand in most consumer segments, be it white goods, consumer durables, or automobiles. Even the housing sector is seeing increased enquiries. Further, the rural economy, which was less affected by the pandemic, is leading the recovery, helped by good monsoon rains. Overall, we are optimistic that the pandemic-led destruction is behind us. And now, look forward to things getting back to normal soon. Thanks to the economic recovery, we saw increased demand for gold loans during the quarter. Now, we know that the days after the nationwide lockdown, availability of credit from banks and other NBFCs was an issue due to the heightened risk aversion. But more recently, we are seeing demand for gold loans pick up as economic activities head back to normalcy. And with the rural economy showing strength, we significantly stepped up our digital infrastructure and we continue maintain our strong positioning in the online gold loan space. Last year, we had introduced our doorstep gold loan service, which was well received. After the pandemic struck, we extended the doorstep gold loan facility to all our branches across India. This allows us to serve the customer even beyond normal working hours at their homes and offices. They don't have to come to our branch even once. Now, coming to our results for the second quarter of the year, the highlights are our consolidated AUM crossed 26,900 crores, up 18.6% year on year and 6.1% quarter on quarter. We are reporting a consolidated quarterly net profit of 405 crores and rupees 773 crores for the first half of the fiscal, an improvement of over 10% over the first half of last fiscal. Gold loan AUM grew by 30% year on year and 11% on a sequential basis to 19,736 crores, also helped by the increase in gold price. Our gold holding remained flat at 69 tons. That's the same level as the preceding quarter. Our microfinance subsidiary, Ashirwad Microfinance, entered the quarter with an AUM of 4,971 crores, an increase of 5% year on year, and a decline of 1% quarter on quarter. It is well known that the microfinance sector has faced stress in the post-pandemic scenario, but Ashirwad has performed well under the circumstances. While it posted a marginal loss of 2.5 crore for the quarter, we are confident that the worst is behind us and positive about the medium to long term. India's automobile sector has recovered in the last 2 months, and our commercial vehicle finance division saw improvement in the collection efficiency towards the end of the quarter. The commercial vehicle AUM stood at 1,060 crores, a fall of 20% year on year and 16% sequentially, as our focus was on recovery and consolidation. Our affordable housing portfolio is small and the asset quality remains stable. During the quarter, we did not face any funding challenges, and our CP rollovers are happening at record low rates. We remain comfortable on the LM front. Our standalone average cost of borrowing declined by 26 bps to 9.13% from 9.39% in the preceding quarter. Our overall OPEX to AUM ratio remained stable at about 5.5%. Our net growth of rupees 6,500 crore and 26% ROE gives us the confidence to continue on the growth path. Thank you. And now it is over to our CFO, Mrs. Bindu, for a detailed look at the numbers. Thank you.
Thank you very much, sir. Thank you all for joining us. We started with unlocking of the economy, and therefore we have seen business coming back to normal. Especially the gold loan book grew by 16% in the first half of the year. RBI has come up with several schemes to infuse liquidity in the NBFC sector, and we have raised funds through NCDs under TLTRO and PCG, apart from the MLD and the plain vanilla from some institutions. During the quarter, we raised fresh borrowing of rupees 2,904 crore through term loans, WCDL and NCDs. The cash and cash equivalents on hand on a consolidated basis was rupees 4,300 crore and undrawn bank line was rupees 1,140 crore as on 30th September 2020. Again, our CP exposure has come down to 7% against 25% an year ago in the standalone entity. Borrowing costs declined sequentially by 26 basis points to 9.13% despite significant extension in average duration of borrowings. Gold loan business has seen a good growth in the first half, and this has resulted in the non-gold businesses contributing to 27% of the consolidated AUM and the remaining 73% of gold loan. Our consolidated AUM for Q2 FY21 was rupees 26,903 crore, up by 18.6% year-on-year and 6.1% Q-on-Q. Consolidated profit after tax was rupees 405 crore for Q2 FY21, grew by 10.2% Q-on-Q and 6.4% down year-on-year. Profit was up by 16.7% year-on-year if we adjust the one-time tax benefit of rupees 60 crore and rupees 25.34 crore due to the reinstatement of Ashirwad Q2 PAT of FY20. ROE on a consolidated basis was 26%. ROA was 5.1% for the quarter ended September 20. Talking about the gold loan business, which constitutes 73% of consolidated AUM, the AUM increased by 30.1% year-on-year and 11.3% Q-on-Q. Gold holdings stood at 68.83 tons as at September 30, 2020. Gold ton is nearly flat Q-on-Q but was down by 4.4% YOY. The gold loan average ticket size and average duration was rupees 46,499 and 47 days respectively. The total number of gold loan customers stood at 25.57 lakh. The gold loan book at rupees 19,736 crore. Auctions during the quarter were rupees 3.22 crore. Our weighted average LTV stands at rupees 2,869 per gram or 61% of the current gold price. Gold loan disbursements during the quarter stood at 93,368 crore compared to rupees 68,390 crore in Q1 FY21. The online gold loan book accounts for 61% of the total gold loan compared to 63% in Q1 FY21. Coming to the microfinance business, Ashirwad MFI, AUM stands at rupees 4,971 crore, down by 1.3% Q-on-Q, and this business reported a loss of rupees 2.42 crore in Q2 FY21 due to higher provisioning. We provided additionally rupees 66 crore during Q2 FY21 due to COVID, and cumulative COVID provisions was rupees 196 crore at the end of the quarter, that is 3.9% of AUM. Our collection efficiency from MFI business was at 90% in September, and disbursements during the quarter was rupees 557 crore. The company has a capital adequacy ratio of 25.7%. 32% of the MFI AUM was under moratorium as on 31st August in comparison with 80% in Q1 FY21. Coming to the vehicles finance business, we reported an AUM of rupees 1,062 crore, which is down by 16.4% Q-on-Q and by 19.4% year-on-year. Collection efficiency was at 93% and 106% in September and October respectively. Restructuring is only 3% of vehicle finance AUM, and that is 0.15% of the standalone AUM. The home loan business had a total book of rupees 621 crore, which is down by 1.1% Q-on-Q and up by 2.3% YOY. It now operates from 47 states and reported a profit of 0.9 crore during Q2 FY21. Collection efficiency was at 95% and 92% in September and October respectively. Collection efficiency for the quarter was 90% compared to 62% in Q1 FY21. The other loan to NBFCs at rupees 320 crore and loans to SMEs rupees 193 crore. Provisions and write-offs has come down at rupees 38 crore compared to rupees 50 crore in Q1. We have provided rupees 36 crore as additional provision due to COVID since March 2020. Our GNPAs reduced to 1.11% at the end of the quarter compared to 1.25% at Q1 FY21, and this is largely driven by non-gold businesses. On the improved performance, board has declared an interim dividend of 60 paisa for this quarter. Our capital position is strong and company is well capitalized with a capital adequacy ratio of 24.8%. Company's consolidated net worth stands at rupees 6,451 crore and the book value at rupees 76.2. Now we can go for the Q&A section. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Chirag Sureka from DSP Mutual Fund. Please go ahead.
Sir, good evening. Thank you, Ashirwad. We see that collection efficiency is uneven. In some states, you're having a problem. In fact, in Karnataka, after having a better month, it's actually come down. Could you explain the stress in West Bengal and Karnataka? That's question number 1. And the question number 2 is in housing finance also, you had mentioned that the collection efficiency had actually come down in the month of October after being slightly higher in September. How do you see this trend going forward, and if you could give us some color on that? Thank you.
So, major part of your voice was not heard. Your talk was not heard. Can you repeat the question?
Okay, let me repeat the questions. Is it better now, sir?
Yeah, now better.
Okay, thank you. So the first was regarding Ashirwad. When you say 90%, West Bengal is at 75%. Some states are close to 100%, and Karnataka has actually declined after reaching a certain high number. So could you just explain the nuance in each of these states in terms of what is happening, especially the low collection efficiency states? And you had mentioned that the worst seems to be over. So what is the reason for the optimism there? That's the first question, sir. Would you like me to ask the second question also? I can just finish it off. Yeah. Okay, the second question is on housing finance also, where the collection efficiency dropped dropped after peaking the previous month. I think it mentioned the numbers 95 and 92. So is that right? And what was the reason for that? Thank you, sir.
Okay. So, Mr. Rajya is there?
Yes, sir, I will answer that. Yes, very good evening. This is Raja Vaidyanathan, MD of Ashirwad. I also have Mr. Babu, who is the joint MD. We will answer this question. First, let me go to West Bengal. West Bengal has been, if you had seen the presentation, we started with a low of about 56% in July, and we are now at 75%. It is on the increase. West Bengal, as all of you know, has an uneven lockdown pattern strategy. They have lockdown during weekdays, they have lockdown during weekends. There is no pattern like many states where there is a continuous lockdown. So when there is an uneven lockdown, the collection pattern where we operate on a fixed day collections, it gets altered. So that's one of the reasons for West Bengal lower collections. But having said that, the collections have improved now and we are upwards of 75%, and it is on the increase. There is no doubt about that. West Bengal is definitely one of the lower states for collection efficiency, but it's on the increase. Karnataka is a temporary blip. We had 99% in September. In October, it was a temporary blip with some local issues, and it is again back to normal. So as we speak now, in September it was at October, we have already reached 90% collection efficiency. That's the optimism why the chairman said that overall the collections have improved in Ashirwad. Across India, the collections have improved, and in pockets, the good news is in pockets where we have had no collections earlier, collections have started coming. because of livelihood increases.
Thank you very much. That was very clear. So on the housing also, please.
So shall I answer for the housing, sir? Jivan Das here. Hello? Am I audible?
Yes, sir, you are audible.
Okay. Regarding the housing collection, as you know, from the worst of times during the initial months of the pandemic, in April when it was 50, we have steadily improved and reached 95 plus as far as the current billing is concerned without including the overdue, 95 plus in September. As you know, every quarter, the next month which follows the quarter, there is some bit of a slackness which I should admit to, and that also it's not 92 per se, it's around 92.4 something. So this is not an undue cause for worry because this is being tracked on a day-to-day basis. As Mr. Raja mentioned, even in this case also, in some states, especially in the state of Kerala, because of the heightened incidence of COVID and all, we had some issues even now in terms of particular areas being in containment and all that. So that's why there has been a bit of a slackness, I would say. But then we are tracking it on a day-to-day basis. And this month, in fact, we on a day-to-day basis comparison also, we are much better than in October. So I would say that we should be able to improve upon it and keep this going during the rest of the months to come.
Thank you very much, sir. Good luck and congratulations on good numbers.
Thank you. The next question is from the line of Viraj Mehta from Equirus PMS. Please go ahead.
Yeah, hello sir, and congratulations for good set of numbers. Sir, for the gold loan, what is the average loan per gram at this point? Hello?
Ladies and gentlemen, please give me a moment. We cannot hear anything from the line of Mr. Management. Give me a moment while we check. Ladies and gentlemen, the line of the management has been disconnected. Please give us a moment while we reconnect them. Thank you. Ladies and gentlemen, the line of the management is reconnected. Thank you for patiently waiting. We have in the queue Mr. Viraj Mehta. I will request you, sir, please go ahead with the question. Thank you.
Yeah. Hello, sir, and congratulations for good set of numbers. Sir, my first question was regarding the gold business. What is our current loan per gram of gold at this point?
So, yeah, the
LTV.
Average?
Yes.
Yeah. What is it? 2,869 per gram. 2,869 per gram.
Understood. So that means we would still have around 10% growth, which can still happen based on this number, apart from the grammage.
True. Yeah, no more than that, because our as of today, our average LTV stands at 61%. That means 14% more scope is there.
Understood.
Yeah.
Understood. And sir, in terms of if I look at Ashirvad,
Yeah.
would it be now fair to say that we have reached a final leg of whatever that we had to provide, and do you see more provisioning continuing, but because now that we have reached, except West Bengal, in all other states, we have reached more than 95% collection efficiency. Would it mean that now we will not see provision going forward in Ashirvad?
Mr. Raja?
Yeah. See, in the current method of ECL provisioning, whenever we do a provisioning for any quarter, it has to be the whole year has to be considered and the provisioning has to be done. So when we have done this provisioning, we have taken that consideration and we have done. Having said that, besides, while you have taken care of all this emergency provisioning due to COVID and all that, there could be some provisioning because of the normal businesses which happen, which is happening every month. So I wouldn't say there won't be any provisioning, but as you say, major provisioning I can say has done.
No, I understand. Provisioning due to normal course of business, but that is less than 1% when
correct.
Normal provisioning, right? But here I'm talking large provisioning of what we have done is close to 300 crore on a 5,000 crore loan book.
Correct. As we had mentioned, as the CFO Manappuram mentioned, we already provided about 3.9% of our AUM as COVID provisioning itself, which is a very extraordinary item, and we have already provided as an abundant caution. And I should say now, as vis-a-vis RBI provisioning of 147 crores, which is necessary, we have done nearly, to more than 50% or so.
Understood. And sir, last question is to Mr. Nandakumar. Sir, we are hearing a lot of noise from banks becoming very aggressive. But when I look at yields of either yours or the larger competitor in gold loan business, the yields do not seem to be affected. Can you tell me the rationale for it so that everyone is kind of clear with that?
See, I always maintain and I always tell the customers going to the bank are different. Yeah, our customers are typically that of a money lender because they want the service instantly. The turnaround time shall be low because he wants to save the day. And second, our average ticket size is around 50,000 rupees only. So average life of the loan is around 2 months only. These customers keep on coming. So they want instant loan, even for redemption. They want to get it done in the evenings, etc., so that they save the day. For a small ticket, for 2 months, 3 months, etc., going to a bank and if he saves some interest, he loses 2 days' wages, which is far higher. But those going to the bank, they have a larger ticket, and also their intention is to have a long-term borrowing.
Right.
So I have been holding our territory is the NBOC territory is the NBOC territory only.
Right. And so just last question, if you may allow.
Yeah,
we have
please.
Always talked about, even in the last con call of yours, you had mentioned 10 to 15% gold for gold loan AUM growth. But we have already achieved more than that in the first half itself. So would it be fair to assume that, and second half is generally a stronger half for us as far as AUM growth is concerned. So would it be fair to assume that we would see even sequential growth from here of, let's say, 10% over next half over this as of September ending to March?
Viraj, we see a good traction. Things should be good, I would say. Second half of the year also, the business shall be good.
Sure, sir. Thank you. Thank you so much, and best of luck, sir.
Okay, thank you.
Thank you. The next question is from the line of Jaiprakash Toshniwal from India First. Please go ahead.
Thank you for taking my question, sir. Can I have a borrowing breakup of Ashirvad?
Stadia.
See, Ashirvad, we have term loans of close to 60%, debentures of 12%, and securitization of 25%.
Okay. And sir, on the provisioning side, we have mentioned 66 crore of normal provisioning, and our GNP has increased from 2.1 to 2.5. Does it mean that there is also a normal provision also, or we include the special provision under the PCR of while calculating PCR?
In this particular quarter, 66 provision is an exceptional provision fully. But if you look at the Q2, there is a normal provision of close to 19 to 20 crores in Q2, which was basically done in Q1, which was prior to what was happened to March 1st. That has been provided for in Q1. In Q2, the 66 crores is entirely COVID provision.
Okay. And lastly, again on Ashirvad, sir, our employee costs has increased YOY from 48 to 35, 48 crore to 48 crore. Is there because of any specific addition to headcount and any years and what segment it has been added?
No, it is a very conscious strategic addition because we found that once the COVID broke out and the collections becoming tougher, we consciously reduced the caseload of the field people. From a level of 750, we have come down to close to 500 now. So every employee is contacting less number of people so that the efficiency moves up. So we found the cost of increasing HR is, much beneficial than, having this higher caseload. This improves the collection efficiency directly. That's the exact reason. That's the only reason for the increase.
Okay, sir. Thank you. I'll come back in the queue. Thank you.
Thank you.
Thank you.
The next question is from the line of Abhishek Murarka from IIFL. Please go ahead.
Yeah, hi sir. Good evening. So just a few questions from me. So first, if you can share the number of customers in gold loans in lakhs for this quarter, for 2Q20, and for FY19 if possible.
So currently, the live customers are around 26 lakhs.
Okay.
Yeah. So last year, 19, 1 year back. One second. Yeah. Okay. Yeah, we'll get the data. Abhishek, it was. It was 24 lakhs. Now it has gone up by 2 lakhs.
And in FY19?
Yeah, FY19 we started. FY9 we closed FY19 with 24 lakhs. Yeah.
Okay. And so in Ashirvad, basically two questions. One, how much extra provisions are you planning to make in the second half, considering that number of people who haven't made payments is also 9%, and you have a 2% in those who are who have paid less than 50% of the EMI. And second question is, would any additional capital infusion be needed for Ashirvad, or that is not really a requirement?
Both these questions are interrelated. As I said, the previous we have now provided adequately for Ashirvad. Having said that, there could be some provision which would come in the next half also. Even taking into account that provision, we will not require any capital requirement for Ashirvad because we are sitting at close to 25.37% now.
Okay. And basically, this extra provision would be within your operating profit levels. So you should not be reporting.
Right. That's right. That's exactly the reason. The network may not get affected.
Okay, perfect. And the third thing is just another data keeping question. So for your collection efficiency for different businesses, can you break it up into with arrears and without, as in with arrears we have, without arrears, what it would have been?
Yeah, you will get it. Okay.
Sure, sir. Those were my questions.
Yeah. So, see, this is commercial vehicles. Can I tell?
Yes, sir. Yes, sir.
So, without any moratorium or anything, well, this is without idea. Okay.
Yeah.
In July, it was 69%, August 74%, September 77%, and October 81%. This is without considering ideas.
Okay.
So apart from that, there is arrear collection. This is apart from whatever I have said. That is in July 15% arrear collection is there. August 17, September 19, and Q2 altogether it is 17%, and October 24%. So the total collection also I will tell you, including arrears plus billing collection. That is July 84%, August 91%, September 96%. So Q2 average is 90%, and October it is 105%, 105%.
Sure.
So year to date, if we take, it is 77%. During the entire pandemic. Yes. Yeah.
And what about MFI?
MFI, Mr. Ajay, you have?
Yeah, MFI, I have a broad number, sir, because...
I have the exact figures. Shall I say?
Yes, sir, please.
Yeah, I have, The total from July onwards,
sure,
collection against billing as well as arrears, July 68%, August 71%, September 87%, Q2 the average is 75%, and October it is 87%. This is the current one. So you want a split? Arrears plus billing? Yeah. In July it is 68% without arrears.
How much, sir? I'm sorry, I didn't get the number.
July is 68% without arrears.
5.8.
6.8.
The earlier numbers you said, sir, those were without arrear, is it?
Yeah. July.
Okay. So with arrears it is 6.8.
This is earlier what I have said is including arrears. This I am saying excluding arrears.
So it's your earlier number for July was 5.8, right? 58.
No. It was 68%.
Okay. Sorry about that. Yeah. Okay.
So July, the same number.
Okay.
68%. So August also 71%. There is no arrears.
Sure.
September it is 82%.
Okay.
And Q2 average it is 74%, and October it is 82%.
Okay, so it is pretty much stagnant October over September.
Correct.
But the October number you said 87, whereas your presentation says 90.
October,
so the 3% is some foreclosure. Including that foreclosure, it is 90%.
Okay. So 82 to 87, 5.
Yeah, I would say like this. Yeah, it is 82%. For example, 82%. It is the billing collection in October. 5% IDR collection, and the balance 3% is pre-closure.
Got it.
That's the exact figure.
Sure, sir. Got it. Thanks so much. Thank you, sir. And all the best.
Thank you. The next question is from the line of Pratik Kothari from Unique Asset Management. Please go ahead.
Hi, good evening, sir, and thank you for the opportunity. Sir, on the vehicle finance side, what was the provision that we provided for the quarter?
Vehicle finance provision stands at 78 crore.
Okay. Fine. Sir, so broad, my question to Mr. Nandakumar, broad, because we have been, in terms of our guidance for the next 6-8 years, we have mentioned that we would be aggressive in increasing our book on the microfinance and also on the vehicles, basically the non-gold part of the business. And is there any change in strategy given the underwriting results that we have seen? Because even if you go back a couple of years during demonetization, we had to provide a huge percentage of the book for the MFI part. Even during COVID, we have already provided 4% of the book on the MFI part, I think about 7-8% on the vehicle part. I mean, the reason I'm asking is this business generates about 7-8% of pre-provisioning profit on the AUM that we manage. And if you have to provide 4-6-8% of the book, it takes out all the profits. And such exceptional items are way more frequent when it comes to the MFI business. So any change in strategy, what are your thoughts? Any changes we are making internally such that we don't have to face this time and again? Because the underwriting seems to be slightly weaker, or historically we have seen that a gold business obviously is very safe, but this seems to be losing a lot of money time and again.
No, it is, one reason is our conservative provisioning policy. Later, even after demon, we have collected from whatever a good sum out of the return of amount. So we do that, we provide that from the provision as well as the return of amount. It is our, we continue collection. So only because of very conservative policy, which is more conservative than the regulatory provisioning norm, we have made a higher provision.
Mr. Kothari, may I request you to please come back in the queue?
No, it's a follow-up, ma'am. Just if I can complete. So what you are alluding to is then what we are providing for is basically we'll see some reversal going forward, and this is also what we saw during demonetization?
Yeah. But see, it is always our policy to be very conservative in provisioning. Yes, whatever you have said is right.
Okay, fair enough. So thank you and all the best. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants, please limit your questions to 2 per participant. Should you have a follow-up question, we would request to rejoin the queue. Thank you. The next question is from the line of Dhaval Gada from DSP Investment Managers. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. I had just 2 questions. First is, sir, if you could give the normalized billing collection pre-COVID for all the 3 segments. You said that, for example, in vehicle finance, our billing collection in October was 81%. What would have been the normalized collection pre-COVID in this segment? Similarly, for MFI, you mentioned 82%. I would presume pre-COVID normalized would have been 98-99%. So if you could just confirm that. And the third is the home finance. If you could give the same numbers like vehicle and MFI for July, August, September, October, and also comment a little bit around pre-COVID, what is the normal billing collection? Yeah, that's it. Thanks.
Yeah. Mr. Ajay is there?
Yes, sir. I will, on the MFI business, I would answer. Yeah. So the pre-COVID collection in MFIs are normally ranging from, you are right, 97 to 100%. It was 99% a couple of years back. Then the new normal became 98%. So February, 98 to 100% was the pre-COVID. And as Chairman said, in October, our collection was 82%. That is because when we say collection is 82%, we should understand it's 1 to 30 plus 1. We are talking about plus 1. We are not talking about 0. post-COVID, the collection on the due date of collection is always, it is decreasing, but it comes within a few days. So 1 to 30 days has become slightly higher now, and that is the reason for showing a 82% current collection. It is definitely collectible. It is not something which is like pre-COVID, where we are unable to collect. Normally, it slips to 30 to 60, 60 to 90, and it moves forward. So that is a major difference in the industry. One should understand that it is not that 99% earlier when we said that 1% was never collectible even after 30 days. Today, the situation is different. It is collectible. It comes with a lag. Sometimes it's a week lag or sometimes it's a month lag. That's the prospect I want to generally put. So it is not an alarming situation. It is very normal. And the Ashirwad is on top of the league on these collections now.
So, Mr. Senthil, about CV and two-wheelers together.
Yes, thank you, sir. Hi. Pre-COVID, our collections were around current billing collections around 90 to 94%. And as MD sir had mentioned some time back, our collections in October, in September was around 77% on the current billing and around 81%. And hopefully going forward, probably in the month of November, we would be improving on our performance. And by the fourth quarter, we'll be back to the pre-COVID levels in terms of collections.
So, Mr. Jivada?
Yes, sir. Good evening. Pre-COVID, our collection efficiencies were ranging between around, say, 94 to 96. And in fact, to be precise, in February, it was 95% plus. Then, of course, rest is history, as they say. We started off again from 50% in April, 60% in May, 76% in June, then to 85% in July, 90% plus in August, and reached about 96%, 95 point something in September. As I mentioned earlier, because of the quarterly phenomenon, next month there is a bit of a snatches in the system, but that is something which is not insurmountable. So in October, we saw around 92.4. Now, this is divided between current billing collection as also arrear collection. For example, in September, our current billing collection was 87%, 87.35 to be precise, and overdue collection was 8.06. That as of October, the current collection is 86.63 and the overdue collection 6. So if you take that 95, that's why we said we have come to around 95 plus, means we have come to pre-COVID level. Going forward, definitely I think the worst is behind us, and as Mr. Raja also mentioned, it's not as if it is not collected in the current bucket, that's the end of it. In many cases, it gets collected as half an EMI, 1.5 EMI in the next month. Keeping in the segment in which we are, I believe this is quite an acceptable thing, and I'm sure going forward we will have better collection.
Yes, you heard about home finance from Mr. Jivandas.
Yes, sir. Sir, just one follow-up. If you could, if you see the billing collections across the three businesses, there seems to be some stagnation that has come from September to October. So is this normal in your view, or is that a little bit of a concern that the billing collections are not going back to the so-called pre-COVID level in across all three businesses? So any comments around that?
No, last month a few things have happened, which is temporary. One, a number of festivals were there. The second, in many parts there were temporary lockdowns. So in rural areas, semi-urban areas, it was the time of picking up. And now it is slowly flattened and coming down. So November onwards, we hope the collections will improve.
Okay, sir. Thank you and all the best, sir. Thank you.
Yeah.
Thank you. The next question is from the line of Mitesh Goel from Ambit Capital. Please go ahead.
Hello, sir. Most of the questions have been answered. So I just want to understand one thing. Why the gold tonnage is coming down?
See, the people are not availing the full LTV. Our ruling average LTV, current average LTV is only 61%. People come and borrow, say, 20,000, 25,000. They are bringing these. This is not one piece. The gold pledge is not one piece. These are in pieces. These are ornaments. in small quantities, small weights. So they pledge according to the requirement of their money, loan amount. So that's why they redeem. Then when they come back for the same amount, they need to pledge only a lower quantity. That's the reason. And when the gold price goes down, still also the portfolio will grow. So they will come with more ornaments. That's the reason.
Okay, got it. Thank you, sir.
Thank you. The next question is from the line of Kaushik Agarwal from Haitong Securities. Please go ahead.
Yeah, hi sir. Thank you for the opportunity. Sir, just two questions from my side. One is a data keeping question. Sir, can you please repeat the disbursement number for the current quarter Q2 FY21 and the same number for the previous quarter Q2 FY20? And sir, my second question is with respect to your slide number 18, we can see that more than 50% of the gold loan AUM is coming from urban and metro areas. So my first thing is what kind of customers are we catering in this region? As from broad industries perspective, we can see that most of the gold loan demand is from the rural areas, and the major portion of the gold loan AUM is from urban and metro. So just your view on this. So yeah, these two questions.
See, the dispersals you want in all the verticals?
No, sir, I just wanted for gold loan business disbursement for this quarter and last previous year quarter.
Yeah. So you said I will answer first the second part of the question. We have a large number of branches in metros. Even though the metros, the lockdown was there, because of these online gold loan, digital gold loan facilities, and our facility we have provided, infrastructure we have provided in converting this non-owned gold into gold loan also. So a lot of customers started availing online gold loan. And our gold loan pre-COVID was around 48%. Now it has during the COVID period, during this pandemic, it has gone to more than 60%. So many of these customers who are availing online gold loan, they had pledged for a lower amount because they can avail the loan at any time from anywhere. So through their bank account, anytime they can withdraw. So they have withdrawn. So that has pushed the gold loan growth also. And you said with this online gold loan facility, the profile of the customers are also slowly changing. Now, as the liquidity comfort is there for a housewife or a small retailer or a person who are regularly traveling, so our profile is slowly moving up in the economic strata. And now we'll go to the disbursal number.
Yeah. So during the quarter, our gold loan disbursements at 93,368 crore and compared to 68,390 crore in Q1 FY21.
Ma'am, just Q2 FY20 number was?
50,250 crore.
Okay. And so just one follow-up question on the first question which you answered. Sir, just regarding as you said that since most of the customers are now moving to the online gold loan facility, sir, these customers I feel are more mature and they must be having other, they can avail other kind of unsecured loans also from the market, considering the interest rate being charged on the gold loan by NBFCs is comparatively higher to the banks. So why will the customer go for the gold loan in the online through the online gold loan space?
Yeah, these are two distinct products with different convenience. See, this online gold loan, what is the facility? they are in fact getting free safe custody of gold, free storage of gold, and also the liquidity. They need not draw the money at that point of time in full. They get their drawing power based on the weight, based on the value of the gold, so which they can use any time. So even without paying interest, they carry the liquidity. See, this is like virtually they use like an overdraft. That's a facility. Yeah. So the other loans, these unsecured loans, they don't. These loans don't offer the overdraft facility, the working capital facility. So many of our customers, gold loan customers, have the facilities from banks also.
Okay. Thank you, sir. Thank you so much.
Thank you. The next question is from the line of Harish Kumar Gupta from Nirmal Bang Securities. Please go ahead. Mr. Gupta, your line is unmuted. Please go ahead. Mr. Gupta, may we request you to unmute your line if muted from your handset? As there is no response from the line of Mr. Gupta, I have muted his line. And we'll go to the next question, which is from the line of Shweta Daptarkar from Prabhudas Lilladher. Please go ahead.
Thank you, sir, for the opportunity. So two questions. One, when you say 61% of your AUMs is online gold, so can you just bifurcate this into renewals or fresh customers?
See, this online gold loan, once they set up the facility, arrange the facility in a branch, they use it several times. Sometimes on the same day itself they may use. So almost all the customers are old customers. Very few, only around 5% customers are new customers. The reason is they pledge it as a non-online gold loan for the time being. Then our people will be able to showcase them the advantages, communicate with them the advantages. Then they start doing. Then they become the online gold loan customers.
So, sir, is my understanding correct? So, is it does it so happen that the loan is, for instance, the average maturity of the gold loan is say 3 to 5 months, and closer to the end of the period, the customer comes for renewal and opts for online mechanism?
Yeah, the real life of a customer the loan continued over a period of time. Maybe after closure, he pledges on the same day, settling interest, everything, and marking to the market, etc., etc. So that life is 2 months, but the average life of that customer is around 8 months.
Okay, I get that. And so lastly, what are the write-offs for this quarter and the same number for previous same quarter last year?
Gold loan, there is no write-off. In other segments, CFO will tell.
Yeah, so the P&L impact, which was 50 crore in Q1 in the standalone entity, has come down to 38 crore in this quarter.
So that 50 crores is for the non-gold business, right?
All put together. This includes stage 1 provision also. So Q1 compared to Q1, there is a reduction in P&L hit on account of bad debt and provision.
Okay, and ma'am, what was the number for the corresponding quarter last year?
Last year, I'll get back, Shweta. It is comparatively less because these 2 quarters, because of the COVID, there is a small increase. There is an increase in provision because Q1 also we aggressively made a provision for COVID because there were uncertainties and lockdown exists and all that. So that is the reason Q1 we did an aggressive provisioning. Q2 things opened up and the collection efficiency also improved, and that is the reason the provisions has come down. Q1 was mostly based on some estimates. Without doing much moratorium in the book, the delinquency has been taken into consideration for the provision, especially in the case of vehicle finance, because in the standalone entity, gold loan remained, the collections remained same compared to pre-COVID.
Sure, ma'am. That was elaborate. Thank you.
Thank you. Ladies and gentlemen, due to time constraints, this will be the last question for today, which is from the line of Bunty Chawla from IDBI Bank. Please go ahead.
Thank you. Thank you for giving me the opportunity. Can you share the incremental LTV during the quarter for the gold loan? As you have suggested, 61% is on the portfolio basis. So just incremental LTV. Secondly, as we have seen, gold portfolio has grown at 30% for H1 FY21. So can you share? Previously you have outlook AM growth of 15%. Can you read or you can increase the AM growth for the full year FY21, or what is your forecast for that? And thirdly, just a clarification, COVID-related provision for MFI stands at 196 crores and commercial vehicles 78 crores. That's it from my side.
Okay. So the incremental LTV is around 2%. First half of the year we have grown over 15%, and we are seeing good traction in that during this quarter also. We hope the things will be good. And regarding the provision.
MFI provision, you are right that additional COVID overlay at rupees 196 crore. The 78 crore which we discussed is the total vehicle finance provision outstanding in the books. In vehicle finance, second phase of moratorium was nil. So whatever in the books we considered as stage 3 as it is, and made a provisioning. So there is no separate COVID provision for vehicle finance.
Okay. And for the full year, what will be the AM growth guidance on an overall basis?
No, we are not guiding anything, but the business seems to be good.
Okay. Thank you. And best of luck for this half year.
Thank you. Ladies and gentlemen, as this was the last question for today, I would now like to hand the conference over to the management for closing comments.
So, thank you for attending the conference. Even though there were some disruptions happened in between. Thank you for remaining patient and actively participating. And look forward for an active interaction with you in future also. Thank you.
Thank you.
Thank you.
Thank you.
On behalf of Motilal Oswal Financial Services Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thanks.